All right. Hello, everyone. It is June 10th, and so far on a oh, really quick, Balrish, I'm getting some feedback in my microphone. Let's try this. Yep. So this was my own stream. Sorry about that, guys. It should be better now. So June 10th, it's been a bloody Friday thus far. We've seen another retrace today as crypto, as the title states, continues to be pegged to what's happening in equities markets. And right now, equities markets are getting crushed once again. It's down another, at least on NASDAQ side, it's down another 2%. The S&P 500 overall, just under 2%. Either way, we have seen quite a bit of bleeding going on just the past couple of days, kind of a roller coaster week. And we can see, I'm going to refresh this really quick because it may have changed just in the past half hour since I first had it open. But we can see here that Bitcoin is down only about 0.5% over the past week, which may not feel like a lot, but altcoins are really starting to struggle. If we just look at the last 24 hours, take a look at this sea of red here that is starting to form. Even though Bitcoin's only down 2%, Ethereum down 3%, many altcoins have fared much, much worse. So it seems to be the alts in particular who have been struggling through this topsy-turvy, tumultuous market. And we can see here, we'll go back to 7 days here, but if we look up its social volume, Bitcoin and Ethereum are being talked about much less, while stable coins are really seeing a big jump in discussion, particularly Tether and USDC, as a lot of top whales have been switching their stablecoin of choice from Tether to USD coin in the past probably month or so, ever since the depegging of UST and USDT happened around mid-May. So that said, we're in a bit of a scary time once again, as support is starting to be within reach for a lot of assets once again. Ethereum is back to the low 1700s, where it finally saw a bit of relief the last time it got there. The question mark is going to be whether that history can repeat itself, or if it breaks through and we may have a bit more of a scary drop coming up. We got some news from our staff members who have been doing some hunting today, and they found that the Fed is likely to remain pretty hawkish. So we'll see a few temporary reliefs here and there, probably to give a little bit of confidence, but the overwhelming consensus, at least on our team's end, is that there could be a little further downside here as a result of inflation concerns not really favoring the bulls right now. And with that said, we can take a look at how the crypto markets versus the S&P 500 versus gold are all looking at the moment. And it's about as you'd expect. We had this big drop here today, and we're sitting, it looks like the lowest we've been since May 26th, so about a 2-week low on the S&P's end, after it did see this nice recovery from the 20th to the 26th. But look at how Bitcoin has stayed closely attached to it here in green, and it's now dropped right pretty much to where the S&P was comparatively on the lows versus highs over the past month here. You can also see gold is more or less following suit as well, which is very interesting. Many people talk about gold being the safe haven and the hedge against the dollar and falling markets, but right now all three are kind of falling together, which is a pretty scary proposition. And the last time that really happened was the early part of May, where the FOMC made their announcement to jump interest rates by 0.5 percentage point. So the correlation is very tight. Obviously, we have said on many occasions that crypto works best when it doesn't have a tight correlation, it doesn't have an inverse correlation. It is simply moving independently from what's going on the equities end or the gold end, and able to carve its own path. Right now, due to many reasons, but one of the main ones being retail traders being heavily involved in crypto now, where that wasn't the case 2 years ago. That means we are seeing more fluctuations between crypto and the S&P 500 happening in unison more than ever before. Doesn't mean this is going to be that way forever, especially if crypto markets really start to flush a lot of weaker hands out. That'll take a lot of retail investors out of the equation along with them. But for now, while there's still somewhat a degree of confidence that equities and crypto markets can rebound, we'll probably continue to see this correlation at least through the end of this month, and then we'll see how the Fed reacts on their next meeting coming up. So we've touched on prices, we've touched on the correlation between the S&P. Now let's try to take the lion's share of this call to dissect exactly where markets may be heading and how scary this drop really is in comparison to what the fundamentals are showing, and indicators involving on-chain metrics, utility, things like that, to see if there's a bit of a bullish divergence forming, because that's always the thing that we can hope for. If most of you are bulls, we want to see on a big drop whether fundamentals are remaining intact and showing that markets can still remain strong. And right now the answer is kind of. And we'll go through each metric here to really go through how we come up with these conclusions and teach you a little bit about how we use our metrics effectively. So beginning as we usually do with token circulation, this is the amount of unique Bitcoin moving on the BTC network on a daily basis. And we want to look for a long-term rise. Arguably, we have a little bit of that going on. If we go back to mid-January, we were sitting at about 84.5 thousand Bitcoin moving per day. That is now up to 204,000 per day. So obviously a pretty large jump there. Correction on the circulation, it was 168, not 80 something I said. But either way, we're looking at probably around a 25%, 20 to 25% increase in circulation over the past 5 months or so. And if we look here at the NVT model, let me make this just a little bigger. So this gives us an idea of just how bullish or bearish the amount of circulation is at any given moment versus the actual market cap. And really, it's been pretty effective over time, this model, at indicating when prices are starting to get a little oversold or a little overbought. Overbought is indicated by these red bars, and oversold is indicated by these yellow, green, and green bars. And we just went through a stretch from October all the way until May, where we were getting anywhere from semi-bullish all the way to full-on bullish as May ended. However, after a little bit of chopping, the prices thus far in June have been going down through these first 9 to 10 days. And it is showing a neutral bar right now, indicating circulation. If we go back here, it's not exactly holding up the way we want. We can see this smooth moving average is starting to drop back down after going as high as 230K per day. So that's likely why we're seeing this yellow bar here instead of another bullish divergence. The reason it isn't bearish is simply because the market cap has dropped consistently over this time. And this model is measuring not only circulation, but how it relates to the current market cap. So we don't need as much circulation here as we would during the all-time highs back in April and October and November when it was well above 60K. So neutral is exactly what it sounds like. It means that we've got a little bit of a indecisiveness going on this model right now, but it's certainly not showing bearish, right? We don't want to see these red bars here. That would indicate we're in a little bit of trouble because of the lack of utility going on. But considering we just went through a long stretch of semi-bullishness and bullishness, and the price didn't rise, it actually kind of chopped and then fell. I still think there's some some leaning toward semi-bullishness once markets settle, and hopefully they do so this weekend. But there's obviously a lot of different metrics we can look at together. So let's unwind a few others and see how they compare to what we're seeing with circulation right now. Here's daily active addresses. We can see that the amount of DAA per day was up around 977K just about 3 weeks ago, and it's now back down to 908K. This is not quite the low over the last 6 months, but it's getting close, other than right around here in late January when things got below 900K. There haven't been too many moments over these past 6 months where we've seen a lower amount of unique addresses interacting on the BTC network. And that's a concern, as you would imagine, because if we look historically, we'll go the last, just do the last 7 years, why not? All the way back to 2015. Notice how the daily active addresses rise. We see all-time highs and then they fall. Rinse and repeat, another local top, it falls. Again, daily active addresses hit all-time highs here in March and early April, and then they fell. So, you know, this was kind of the big red flag because we saw a higher high in price, but the daily active addresses were significantly low, not lower than not just the spring here in 2021, but even 2017, there were more daily active addresses than there were when the price pushed all the way up above 68K for the first time. And we did see an interesting rise in the early part of May after the big drop and a lot of polarization was happening. But thus far, it really hasn't translated into much of a bounce. And in fact, you know, at least Bitcoin is still sitting just under 30K at the moment. But it is not looking like we are on the verge of dropping to some really low, you know, below 600K daily active address types of zones like we were in back in 2018. So that's both a good news on the long-term end, but more bad news on the short-term end, because we are struggling to stay afloat right now with a good amount of unique addresses interacting on the network right now. So heading back to our on-chain metrics, we can look at plenty more. One of our highly touted metrics would be the 30-day MVRV. I'm going to zoom out to the last year, and we're going to look at the opportunity zone of 15% there. Looks like it made 2. I'm going to remove 1. And we're going to move this down to negative 15%. So what we're looking at now, folks, is the danger zone, which is anything above right here, and the opportunity zone, which is anything below right here on this pink area chart. Right now, we saw that going back to about a month ago, we dropped well below this opportunity zone, and prices bounced very, very mildly before doing basically this little chop dance for the past 4 weeks or so. And while that's happened, the MVRV has actually gone back to neutral because the 30-day returns have more or less evened out over this span here, because we're looking at about 30 days right here, and prices have chopped. So even though prices haven't risen, the 30-day MVRV has sort of neutralized, which isn't great. We actually would prefer to see it still down here, meaning traders are in a large amount of pain, not because we're rooting against other traders, but because historically that indicates that prices are more likely to rise when a zero-sum game like crypto is showing a negative value amongst the average trader. But that said, we are back slightly in negative territory. We're at about negative 2% after getting as high as plus 3.5% or so. So there is a slightly bullish divergence forming once again, because there is a lower risk of investing while the MVRV is in a negative range. Now we can also look at other time frames here. If I take off 30 days, I'll get rid of these lines. And we'll take a look at the long-term MVRV, the 365-day. Drop it here, full screen that. And you'll notice that the MVRV is much more tied to the individual daily price fluctuations. And that's because 365 days means there's not going to be much of a cutoff point where traders, you know, are past that 1 year mark where prices are you know, going flat, and it automatically neutralizes out the MVRV like we just saw for the 30-day. That's why we're still seeing a negative 28% for the long-term MVRV, which is extremely low as we look at for the last year. We could even look at the last 5 years here, or 6 years, I should say. And we look at times when it's actually gotten below this. It's really only happened about 3 times. This was the early part of May when it got really low, and we saw, like I said, a slight bounce, but not much. The other time was back in March 2020. That was Black Thursday, when coronavirus was first discovered by the mainstream. And then, of course, we have November 2018, I should say, when we had an extreme drop all the way down to below 3,500 before things bottomed out and then took off going into June 2019. So now we're sitting at about negative 26%, which is still historically very, very low, meaning there's a lot of meat on the bone for prices to rise on the long-term end, but on the shorter-term end, it's more neutral once again. So if you're looking to trade on a week-to-week basis, don't be surprised if prices continue to drop down. But if you're trading on a year-to-year basis, this is indicating that you are in a much less risky position than the average time for Bitcoin traders. So it's really a patience game right now, folks, where you need to make sure you are, of course, not investing with money you can't afford to lose, and also understanding that through the volatility, there's going to be some moments that are going to continue to shake out weak hands, and moments that are going to make you want to be all in because there might be a huge bounce. But really what you want to try to do is keep a level head and focus on long-term movements rather than, you know, a 10% jump in a single day or 10% drop in a single day. We can also look at our MVRV model. So this expands beyond just Bitcoin, which we can see right here as showing semi-underbought when combining many different time frames like 30-day, 365-day, and plenty of others. But look at how altcoins are. They're showing an extreme amount of underbought status, especially Celsius way up here. Anything above this dashed line, it means it's at a historically good point if you want to de-risk in being in an asset while there's a lot of trader pain going on. So just going through some of the assets that are above this dashed line right now: Compound, Curve, Engine, Phantom, Scale, Ren, and the graph. These are just some of many, and this is of course only really looking at top 100 to 150 market cap assets that we have MVRV data on, which means they're usually ERC20s. But there are a lot of different assets that are indicating a severe amount of trader pain. And if we look at the 30-day tab by itself, you know, anything below 15% on the 30-day, that's a pretty strikingly low number for this amount of time. And we see several like AMP, Compound, Celsius, Maker, Wi-Fi, among many others. And really, MVRV to us is one of the most important metrics, because we do and have seen enough historical evidence to show that severe trader pain usually indicates prices rising. Severe trader success and euphoria and profiting usually leads to local tops and prices going down. So that's a quick synopsis on MVRV. Let's see what else we can unwind here. Weighted sentiment. Let's get out of the 6-year view and look at 6 months instead. And each of these bars represents 1 week of sentiment by the trading community. And as you would expect with a massive drop like we've seen, especially over the past month with this one here, traders have gone way negative. They are not believers that this this bear market will be over anytime soon. And even with the FOMC news and kind of the hawkish stance that we expect the Fed to continue to take, there's probably some merit to it. However, when we see things this negative, I wouldn't be surprised to at least see a short-term relief rally to get people away from this negative perception and kind of neutralize out again. We've seen several instances where things get really negative after a big drop like we did see here in January. Then there's just a small little bounce, and that's enough to get traders to believe that it's time for a big relief rally and we're about to bounce back up to where we were above 50K like we were in December. And instead, as soon as people get positive, that's when another big flush comes. So we're seeing a very sustained period of time of sentiment being very low. And eventually there's going to be something that happens that causes traders to go positive. You want to be extra fearful if and when they do go positive, and actually a little more optimistic while their sentiment is this low. This is, right now, this week that we're seeing thus far, which started on the 8th, or the 9th, I should say, it's the most negative we've been over the past 6 months. And we can even go back, we'll do 2020, actually 2019, because I want to make sure to include Black Thursday. So you see right here, we haven't been this negative toward Bitcoin as a collective community since March 2020, right when Black Thursday happened. And that's when everyone said, crypto and all markets are going to go way, way down because this pandemic is a terrifying thing, which it of course was, but that ultimately didn't impact crypto's price. And in fact, kind of instigated the big bull market that occurred over the next 2 years. But now here we are in a very negative state. And the only comparable time was Black Thursday. And prices, today have flushed back down, particularly altcoins. So Bitcoin is only one coin that we can look at, but it at least gives us a slight representation of the crypto markets as a whole. And right now, it's indicating that people aren't very much believers. And if prices go down while people aren't believers, there's going to be a lot of shorts that are succeeding right now. And we'll touch on funding right here momentarily, but usually there's only a short moment in time where traders can be this negative, shorts can be going on this long, and then the price all goes down anyways. There's usually some relief rally, so don't be surprised if that happens. Supply and exchanges, all in all, a pretty good sign, to be honest. We saw a big uptick in supply and exchanges, which was really the most we had seen since December and January from 2020 to 2021. So about a year and a half now since we saw this kind of rise. And then it immediately started falling back down. And we actually want to see supply and exchanges continue to move off and into cold wallets, because that indicates that future sell-offs can be a little more limited because there's literally less Bitcoin on exchanges to sell off. And this is kind of an indicator of what whales are doing, because they're controlling the supply on and off exchanges more than anyone else. We'll touch on whales momentarily, but what we're really seeing now is the first time being below 10% of Bitcoin on exchanges since 2018, November 2018 to be exact. And that's pretty significant. So that's an encouraging sign for the long term. And why don't we do funding rate first? We're going to put it here. I'm going to say, we're just going to look at the 2 hourly funding rate charts. So we're going to ignore Binance, which only updates every 8 hours, and only look at DYDX and FTX for now. We'll look at the last, we'll just do the last month. Historical metrics don't matter quite as much here. We just want to see whether things are positive or negative. And it's kind of been a tale of two different exchanges right now, where DYDX is starting to climb bullish as traders are becoming optimistic on this mild dip, while FTX remains short and is betting against it. So, if you combine these together, it's more or less going to be a pretty neutral number. I'll show you how to combine just because I think it's a good educational, quick showing. Uh, all I'm going to do here is click DYDX and FTX, click combine. I'll call it average funding rate. And then we're going to put these in parentheses. Most of you probably know how to do basic average mathematics. You just add the two together and then divide by the amount of things you're adding, which is 2. Combine that and drop it here. So now we have the average funding rate. I'm going to make sure to put this on a filled area because that's going to allow me to see the 0% line. Full screen it once again. And we can see that it's a very, very slight positive funding rate right now, but this is more or less neutral. I can show you the historical context for this because it is important. We'll do the last 2 years. So it cuts off. This is where we started getting funding rate data here in March 2021, but we can clearly see some better perspective now where it's showing neutral compared to, the longs that were going on here, especially up here, and even more so at the all-time high, the then all-time highs in April, where they were just exploding with longs and a lot of long liquidations happened around here. Then, of course, short liquidations happened here. Some short liquidations happened here. You can see prices are rising against the shorts, and now we're back at neutral. So really what we want to see is more shorts like this. This would be the big anomaly where there were a lot of people shorting, and normally that leads to a price rise, but it didn't happen in mid-April. Instead, we got just a very mild uptick. Things went neutral, and then boom, people got a lot of pain here. And then you saw a lot of people longing with mixed results, and now we're back in neutral range. So funding rate, I think, is a very important thing to keep tabs on. Probably another top 5 metric alongside MVRV, whale behavior, and a few others. But now let's take a look at whales and see how they are looking in comparison. So we can look at the 100 to 10,000 tier like we usually do. And this is a perfect example of how much power whales have in the markets. We can see when they are accumulating, prices are rising. When they start to dump, even a little premature to all-time highs at the time, that's when basically your warning flags should be going off and telling you that prices could very much drop in a hurry. We saw the same thing here. They accumulated once again. They started dumping a couple weeks prior to the all-time high, and then everybody else felt the pain very quickly. Since that time, we're hoping to see an accumulation, but it is not happening whatsoever. It's just a whole lot more dumping that's been happening. And the supply held by these addresses is down to 47.3% after being as high as 49.5%. So about 2.2% of all of Bitcoin's supply. That's, I believe, tens of billions of dollars. Someone can correct me on that. I may be off by a factor of 10. But regardless, they've dropped a ton of money over the past 7 to 8 months now. And prices have been feeling the burn as a result, among other reasons for prices dropping. But I think this is a very important thing to keep a close eye on. And we can even look at something like the 10K to 100K addresses, which are going to be heavily represented by exchange addresses. But you do see there is some encouraging results here, and there are still some real traders that have massive amounts of Bitcoin, like 10K to 100K in their addresses. It's hard to prove how many, but the number is definitely over 0, and we do still see plenty of alpha, mostly dumping going into the bull rally here, which is why we don't like to use it. But we also see a pretty steady supply of accumulation happening from the beginning of the year up until now, even though these addresses are going down. So it's arguable that some of these 100 to 10K addresses are becoming 10K to 100K addresses, indicating there could be some accumulation happening. What we don't want to see is both of these lines going down together. That would indicate that they're basically selling off the supply to the smaller traders who are trying to buy the dip and will the price up without much buying power compared to the whales. So that's a little update on whales. We touched on funding rates. We're about 30 minutes after the hour. We're going to try to do 5 to 10 more minutes of analysis on Bitcoin, maybe a little Ethereum, and then Balresh will start taking some questions from the crowd regarding some altcoins or just some clarifications you guys may want in terms of what I've shown thus far. Rounding out some other metrics here, we've got exchange flow balance, which is looking pretty much neutral. We saw a huge influx of exchange inflows here, followed by outflows. We generally want to be very cautious of major inflow spikes, which we're not really seeing. I mean, this one arguably was a pretty big one, and that occurred right at a local top here on June 1st, May 31st or so. So that could have been a slight foreshadower, but we also saw an outflow spike indicating that there were plenty of tokens being taken off of exchanges as well. So more or less neutral on the exchange flow end. Network realized profit loss, plenty of negative spikes, which is good. That means there's a lot of trader pain and net losses accumulating on the network right now without a whole lot of gains. Generally, prices rise when there are lots and lots of losses starting to accumulate up, like we saw here and we saw here. These both foreshadowed big price bounces. So that could be one of the more bullish arguments that we see right now, is the fact that there are a lot of negative realized transactions and overall results happening right now. Development activity, more or less pretty neutral. I think in general, development activity is a little more applicable to altcoins than it is for Bitcoin. Social dominance. So this one's important. We generally want to see Bitcoin social dominance remain high. We can clearly see a correlation, back to 2020 when, 40% of all Bitcoin, all discussions in crypto forums were related to Bitcoin. We're only sitting at about 12.8% now. So there's a lot of discussion related to altcoins, likely, about how much they have been dropping over the past few months. And even today, the dominance has dropped way back down after getting up to about 18.5% just a couple days ago. But because altcoins are the big stories and how much they're losing, they're likely getting a lion's share of discussion right now. And we want to see whether markets are going up or down. We want to see a heavy amount of discussion staying on Bitcoin and not the altcoins that have less pull on where markets go next. So until that changes, be a little concerned, because there's still quite a bit of focus on smaller assets instead of the one that is carrying the load in terms of whether prices can move up or down for all of crypto markets. Age consumed, not too much to say. There's not a ton of dormant coin movement going on. The last time we saw a bit of action on the dormant addresses was when the big drop off occurred between the 10th and the 12th. You'll notice when we see token age consumed spikes, it can very much indicate price direction changes, even if it's just a temporary one, like we saw there, and even arguably there. So keep an eye on age consumed, more of a long-term metric, but when we eventually see some spikes there, we'll try to cover it more, because there haven't been very many exciting opportunities to show how powerful that metric is. I'm going to show this metric in just a moment. Whale transaction count. We're seeing kind of a continued drop in whale activity. Not great to see. We'd prefer to see some spikes like this begin to pop up, but right now that's not really the case. We're seeing just a long-term decline in terms of transactions valued at $100,000 or more right now. And until that changes, it means that the whales are a bit disinterested in where prices are going. And when whale transactions are going down, it creates an argument that the prices will continue moving in that direction until whales start to wake up and decide they are going to shift the prices a bit from where they are, from the direction that they're going right now. Okay, let me open up the ratio of daily on-chain transaction volume and profit to loss. So we're going to look at both Bitcoin and Ethereum together at the same time and see what is going on lately. Generally, when we see these high profit take bars, it's a sign of local tops likely forming because there's an immense amount of profit being taken by traders. When we see them going really low, that is a less reliable indicator of a bottom, but still there is some credence to bottoms forming when there's a large amount of transactions happening at a loss, basically people capitulating and trading out of their assets because they don't want to experience any more pain than they've already experienced. And we do see, as of this week, we're getting a pretty extreme amount of loss transactions. Ethereum, it's only been a couple of days, but Ethereum here in red is showing that we're at the largest ratio of losing transactions versus profiting transactions in the last 2 years. It's a small sample size though, so we have to see how it plays out. But this is pretty good alpha that there's a ton of capitulation happening and people have had enough with crypto. Another revisit to the low 1700s for Ethereum is likely frustrating a lot of traders and making them want to capitulate and just get out so they can cut their losses. Bitcoin is pretty much in the same boat, not quite the same ratio, but still the lowest in the past 2 years through the first couple days of this week here in June. And as long as it stays low, like we saw here, this was very good alpha right at the end of that week. That's when the bounce happened. As long as it stays low, we could see some relief bouncing once again. But of course, keep in mind that this is only one metric and we have to look at the alpha of MVRV and whale behaviors and how they're dumping right now, social dominance being a bit low. There are a lot of factors that are going to play into when a bounce occurs. And, you know, looking through all of these metrics together, there's probably an equal amount of arguments that prices can go up and prices can go down. I know that's not a fun and helpful answer to hear, but there are just so many factors moving in both directions. And I'll also want to make sure to give the disclaimer that nothing we're talking about here is investment advice. And we're showing data based on historical evidence and what typically happens when we have setups like what we're seeing now. And really the findings that we see at the moment is it's very neutral with a bit of a bearish asterisk due to the real life hawkish stance that the Fed is likely going to continue to be taking. So keep that in mind for Bitcoin. But as we all know, there are still thousands of altcoins that have a mind of their own. They are very much pegged to what's happening with Bitcoin, but not entirely. So there could still be some scenarios where altcoins have a nice rally now to give themselves a relief while Bitcoin stays kind of neutral. That's happened plenty of times over the past couple of years. So why don't we dig into a few alts and see what some of our viewers' questions are as I just pull up Ethereum really quick and jump into a few metrics while we wait. So Balrish, feel free to take a poll, or if you already have a few requests lined up, read them to me and I'll jump into them in just a moment. No problem. Looks like 19 of you who are here right now. I appreciate it. So circulation for Ethereum, more or less neutral. It's looking to be about the same as Bitcoin. We can check the NVT model and see that Ethereum is looking bearish in the month of June. It was actually showing a semi-bullish divergence in May, but because of this drop, the first 9 days of June, the model is now saying we're seeing a bearish divergence once again. So a bit of a bummer there. I would imagine that we need to get back to around 1 million Ethereum per day of circulation in order to start seeing a semi-bullish divergence once again. But all this orange and red here for pretty much the last year is a sign that Ethereum has been overheated for quite a while and may need to have a bit of a cool down period before getting back into green territory like we saw back here. Daily active addresses, really not great for Ethereum right now. We're seeing about 390, 400 the last couple of days. The average Ethereum daily active address day over the past 30 days is 450K. That's a far cry from 540K or even 560K last December. So it is not moving in the right direction, and there are less and less addresses moving on the network at this time. MVRV is much more negative than Bitcoin, so that's encouraging. This would be the opportunity zone, and right here is the danger zone. We're nowhere near the danger zone, but we're more than halfway toward the opportunity zone, which would be a historically good time to get in on a bounce like we saw play out perfectly here in late May, and also in the early-ish part of May, where we saw a short-term bounce. But yeah, if we see this MVRV start to creep down here, pretty good sign, and would have a very historically decreased amount of risk for people who are adding to their investments or opening up a new one. Anything below 0% is already a decreased amount of risk. It's just not in a historically good zone from what we've normally seen. Weighted sentiment, not quite as negative as Bitcoin, where we're seeing 2-year lows right now, but we do see a consistent amount of negativity toward Ethereum, just like we're seeing with a lot of assets at the moment. And until that changes, it's going to be a better than average sign that we can get some relief while traders are so negative toward the asset. Supply and exchanges, it's been a bit topsy-turvy for Ethereum. We had a long stretch here from the basically late February to it looks like late April, and then it started to rise pretty significantly. Supply got back up to 13.4% after being as low as about 12.4%. So a full 1% of Ethereum supply moved back to exchanges during the chaos and all of the panic selling that was going on here. Now it's moving back down, which is a good thing. We'd rather see it move down, meaning there's less Ethereum to sell off on the network. But there's a ways to go. We're still well above where we were in late April. So what we're going to hope to see is a continued downturn and not further upward movement, which we saw back in late December, leading to this beginning of a pretty major drop. Ethereum's whales, take it with a grain of salt. We have looked through whale data pretty extensively for Ethereum and come to the conclusion that it is really, really hard to identify a particular tier that has good alpha on where prices are going next. Arguably the 1,000 to 10,000 tier, which are kind of sharks, they've done a decent job of identifying where prices will go next. 10,000 to 100,000 also the case. So if we look at the last 3 years for context, we can see that the 1,000 to 10,000 tier has just continued to drop off dramatically. But the 10,000 to 100,000 is in probably a tighter range for, in terms of being correlated with price. And we see here, they accumulated a bit in late December before a big drop off and prices followed. In fact, what I'll do really quick, I'm going to isolate the 10K to 100K, take off price for a moment, and I'm going to put on the BTC price instead. which I think is a little better of a reflection of what the actual whale's impact on that particular asset's price is, instead of just being pegged to Bitcoin. And I'll make these bars. It's a little too bright, a little too dark, right about there. So let's check this out again. So this is Ethereum's price in BTC. We'll get more clear indication of don't know. Can other people hear me? Okay, just let me know if it happens again. So what we're seeing now is more of a drop off in the supply held by this tier. They hold just about 25% after being as high as 26.5%. So they've dropped about 1.5% of Ethereum supply, which is a lot. It's in the billions. And that indicates that there is less confidence from whales that this rally or a relief rally can happen, or at least long term, they don't want to hold Ethereum until prices get down to the prices that they're going to be satisfied with. But overall, we're at least relatively better than we were back here in October and November when it was way down at 23%. So short term, it's not great to see that they've been dropping. Maybe the price is already kind of baked in to their drop, but they are significantly above where they were, at the end of 2021. So I'd call it kind of a concern short term, but neutral long term as far as Ethereum whales go. Just looking at the last year here to get a little better perspective. Yeah, it's been up and down, and you can clearly see, when right before they start dumping, that's when the local tops occur. Here, pretty good example. This was an interesting, they were accumulating as prices were going down, so it's not always going to be the case. Like I said, Ethereum has some limitations in terms of specific whale tier behavior and how prices follow. But we can also look at whale transactions way down here. And we see that there is not a lot of whale activity going on. That's not great to see. We did see a huge amount, the largest since September, occur earlier, just about a month ago when there was that big drop off. And so right now, it doesn't look like there's a lot going on, and whales are gonna, watch today, especially if Ethereum drops below 1700. We'll see how whales react to that. And if we start seeing some signs of some big spikes on the whale transaction count side, that would be a very good sign of at least a short-term turnaround happening, because we saw a very good one here, very short-term one here. If it's like an isolated spike, you might see like a very short-term price spike and then further drop down. But if you start seeing clumps of whale transaction spikes like here or here, it's historically a good sign that prices can at least recover for the midterm. I also pre-compiled this whale transaction sand sheets model. I'm going to make it a little bigger so we can see the asset names. So the percentages here represent just how much the current 4-hour interval of whale transaction spikes are versus the top transactions. It looks like it's going to refresh right now, unfortunately, but anything like 90% above, like Binance Coin, OMG Network, even some in the 80s like 1inch, BUSD, Quant, XRP, Tether. These assets are all seeing a much higher than average amount of whale transactions right now. We can look at one really quick. Let's take a look at
Brian?
Let's take a look at BN. Yes.
Omise Go, OMG, was requested in chat anyways, so maybe we can take a look at that one.
Sure. Okay, I'll go straight to BNB.
Oh, sorry, it was OMG.
I'm sorry, I heard OMG and I in my head said BNB because I was about to look at it. So yeah, let's go right down to whale transaction count first and foremost. We're going to want to zoom way into the last month. Go to 4 hours. So yeah, it's not a huge spike by any means, but we can see why the model is seeing it as kind of a top spike compared to usual, because less than 10% of these spikes are at or above this spike. So it shows that there, with the 6 whale transactions that have occurred, which are not very many, it means that there are some heavy reactions to this drop in price that has occurred over the last 24 hours or so. So there could be a short-term turnaround there. We saw this one kind of on the other end where there was some profit taking right near the top, and that led to a big drop off. This was the biggest one, and this occurred at a local bottom, and there was a short-term price rise for the next 2-3 days. So yeah, there's some viability to OMG network having some possible relief rally just based on that mild uptick in whale transactions. Let's take a look at some other metrics though. Go to the last 6 months. Obviously, the huge circulation spike occurred here on the 16th, 15th or so. It didn't really lead to much price action though, and circulation is mostly pretty neutral. Daily active addresses are continuing to slide. It looks like the 30-day average is down to 207 active addresses per day, which is the lowest in the past 6 months. Probably lowest in quite a while. Yeah, it's been sliding. Let's see, let's go back to 2019. Yeah, so as far as the past 3 years, this is the lowest amount of daily active addresses that OMG has seen. So that is obviously not great to see. We would prefer to see a bit of a rise in utility right now, but as far as utility goes for both circulation and daily active addresses, not a lot going on. It looks to be rather quiet on this network. I was curious what the market cap rank is. Yeah, it's just inside the top 100 right now at number 98, and it's historically been around that range for at least the last couple of years. The 30-day MVRV, let's take a look at that. Let's get these opportunity and danger zones in the right spot, 15% there. And wow, it's very laggy at the moment. Let's try that again. -15% and -15%. We'll full screen that. So we had our bottom moment here on May 12th when it went way into the opportunity zone. This was the lowest the MVRV had been since December, so lowest in 2022. And it's risen ever since, mostly just because price has stayed neutral and maybe gone up a tiny bit. And now the 30-day MVRV is sitting in positive range at about +2%. So there is a very mild increased risk compared to average in adding on to your investment right now, according to MVRV. Sentiment surprisingly is positive right now. I would imagine that it's probably then we had a very positive and then it's been positive ever since, and prices have dropped off significantly. So we'll probably want to wait to see a bit of negativity until that happens. Combine that with MVRV and what we just saw with a decreased amount of utility, not the best sign for OMG right now. Supply and exchanges, one of the good news charts, it looks like. The supply continues to go off of exchanges if we go back to the last year. Yeah, so it started really dropping in January, right at the beginning of the year, and we've gone from supply and exchanges about 35.9% all the way down to 31.4%. So give or take about a 4.5% drop off in supply. And now let's take a look at whales. The price Let me check on price. Want to make sure I get the right tier. 257 right now. So if we look at whales, and we can look at about the 10K, nope, I got it wrong, 100K to 10 million coin addresses. That'll be about where the whales lie. And they hold just about 50%, which is about right. So over the past year, it looks like they have stayed pretty flat recently. They're just right at about 50% right now after being as high as 65% held. So they have dumped significantly since last year, but at least in more recent times for the past 3 months or so, they've stayed pretty flat. It looks like, wow, that was a very interesting huge dump and then huge rise right after the price fell off a cliff. So this was sort of a, they dumped on the way up and then they accumulated again after prices went far lower than where they were. So that's a classic whale move right there. Same even right here, like you can see the accumulation that they had very short term in early March. And then as soon as this small spike happened, they dropped it off again. And so it's just a very, very low decline right now. I wouldn't call this bearish by any means, but probably short-term neutral, long-term still a little bearish because of the fact that it's been moving down significantly with these whales holding 15% of the supply less than they used to. Interesting. We would have to check on this. I don't know if I fully buy the development activity right now, but it looks almost non-existent at the moment ever since mid-March. Maybe one of our staff members can check on that and see whether, you know, we're still getting the right GitHub data or whether it's on something like GitLab now, because we don't want to give the wrong information here. I saw plenty of development activity over the past year, and then it just dropped off 3 months ago to almost nothing. So that's a concern if it's true, but I hope it's not. Social volume and dominance, pretty neutral right now. It doesn't look like anything crazy is going on. Age consumed, we had a huge dormant token movement on the 16th, 15th, I should say, that lined up with that huge circulation spike we saw. And then if we look at, it's being laggy once again. That was not what I just opened. There we go. So if we look at the 0% or 1.0 line right here, so that's the cutoff point between profitable transactions and losing transactions, in which the network is favoring more right now. It looks like we're seeing a nice skew toward losing transactions today, which would be good, about 2-to-1 ratio right now. But there were plenty of profit-taking transaction days over the past couple of weeks. So this is more or less neutral. We would want to see something like this, even though prices dropped and it's not a good example. If we see a culmination of very negative, well below this line types of ratio of on-chain transaction volume and profit to loss days, that would be an indication that we might see a bounce soon. Or like we saw back here, that would be a good example. But OMG has just been, I mean, if we go from the all-time high in early November, the price has dropped 86.5%. So that's a pretty scary fall off of the cliff. And then whale transaction count we covered. There was a slight uptick, but this is very zoomed out, so you can't really see it. Balrish, why don't you drop me another asset and we can look at that one.
Okay, let's take a short look at Chainlink.
Chainlink. All right, so Chainlink has obviously had a very good week with prices going from the 3rd up until today. Prices have jumped 31%, so very nice to see there. We had a huge circulation spike though, just yesterday, and ever since prices have dropped off. That's pretty normal. If it's a very short-term circulation spike, you'll often see that correlate with a price reversal. We saw a perfect price reversal spike here on May 11th that started kind of the uptick. And then we saw one yesterday, and that could be a sign of the start of a downtick again. Certainly not investment advice, and circulation is not the best alpha indicator we have by any means, but it is interesting to see what happened yesterday, and we'll see how this compares with some of the other things that happened yesterday. Nothing crazy on the daily active address side. It's been pretty run-of-the-mill, a little bit of an uptick, actually. We've seen, other than this big wave that we saw from the panic selling going on, this was the highest spikes we've seen since mid-April or so. MVRV 30-day. So we'll full screen that. It does look like we're getting into pretty high territory for Chainlink. It was actually in the danger zone, and that correlated perfectly with the local top. If you see the crosshair down below, that's exactly where prices started to drop again. Now we're at plus 9.5%, which is still very high, meaning there is more risk than usual in investing in Chainlink right now, but it is not in a danger zone range that equals automatic tops like we saw here and here. Very, very well portrayed by the MVRV metric. Weighted sentiment is positive. That makes sense because it's been one of the standout assets over the past week. And yeah, I would fathom that this is going to come down pretty quick if prices start to drop off significantly and head back toward $8 or even $7 ranges. Supply and exchanges, interestingly, is going up. If we go to the last year, last 3 years, excuse me. Yeah, it's been a pretty steady uptick over the past 3 years, and that's not great to see. We'd much rather see the supply and exchanges stay off, but as of now, it's definitely at one of the highest points it's been at since its genesis. I'm just curious, going all the way back. Yeah, so it's looking like supply and exchanges just continues to climb up and up as time goes on. Very interesting. It's only at 18%. I mean, far cry from OMG, which was above 30%. So take that with a grain of salt, but it's interesting to see nonetheless. Whales, let's see what's going on with Chainlink Whales right now. So the price is around a little over $8. We will look at the 100K to 10 million addresses to see what's going on there. So yeah, this is actually good to see. So since 2019, it's mostly been a continued uptick in link held by these top tier addresses. They look like they just hit an all-time high. Well, at least since 2017 when they first started, so that doesn't really count. But yeah, they're essentially at an all-time high right now. They got just above 25% just last week before dropping a little below that this week, but we can still see it's very high. This is definitely one of the more bullish whale charts I've seen for assets right now. So it can potentially be a very good sign if prices continue to drop, but accumulation doesn't matter. Accumulation continues to go up, kind of indicating how much they don't care, and they're going to continue accumulating until Chainlink has another big price spike like this, and that's where they actually take their profit. Exchange flow balance, pretty neutral when we get off of the 6-year perspective and just look at 3 months instead. Okay, I take it back. So there actually was a pretty big spike. This correlated with that circulation spike as we showed earlier. And it was the largest exchange flow spike since, no, it was higher than that. So we have to go all the way back to July of last year, or maybe August, that looks like it was just slightly higher. So yeah, around a 10-month high in terms of the daily inflow that we just saw, indicating there were a lot of Link being moved to exchanges, probably for the purpose of selling. So a bit of concern there for the short term. But if we look at things like whale activity, perhaps there's some viability for it still being a very good long-term play. Network realized profit, interesting. There was a massive negative spike, even though it occurred at a local top. Usually you'll see the big negative spikes, something like here, right at the base of a bottom. But in this case, if Maxim is in the chat or anyone else who may understand what could have caused this negative spike on a big price rise, I'd be very interested. It could be a very long-term trader who just decided to take a massive amount of Link out, even though they were like in a long-term drop. They took this short-term rise as a good sign to take a lot out. So that's my hunch on why this spike is here. Development activity fairly neutral. It is a very highly developed coin, sitting at about 84 GitHub submissions per day as of now. Social dominance actually jumped up significantly. Go to the last year. So yeah, we just saw the highest social dominance in the past year for Chainlink, getting 1.3% of all crypto discussions due to the rise that it had been on over the past week. So that's another scary sign. We don't want to see the mainstream crowd jumping into Chainlink while it's on a huge rise. That's usually when local tops occur. We also saw an immense amount of dormant coins moving just yesterday. So this was probably related to that network realized profit loss, where there was a long-term hodler or two that made some big moves and likely capitulated just based on the short-term bounce, but capitulated after a long-term drop that they were experiencing. And then ratio of on-chain transactions. Let's just see how we're looking in terms of that 1.0 line. Yeah, so it's been mostly profit taking. That's another concern. So short term, there's a lot of red flags going on for Chainlink right now that it just saw its local top occur. But long term, still plenty of optimistic signs. That's what I'm seeing for Chainlink. Whale transaction count, slight uptick as of late. This is concerning. This was the biggest whale transaction count spike in a couple of weeks. Yeah, pretty much since in about a month, this was the highest whale transaction count spike. So they did a lot of accumulating right at this bottom and then some profit taking here. Doesn't mean it's necessarily having to be a local top, but we've seen 4 or 5 different metrics indicating there are some short-term red flags. All right, Barish, let's take one more asset and then we're going to conclude the stream.
Okay, one from Twitter would be Radix. I don't think we have on-chain data for it, but maybe we can take a look at social.
Sure. So it's what's the ticker for it? XRD.
Yes, I think it's XRD.
Got it. So Radix is not an ERC20, folks. So we don't have things like circulation, DAA, MVRV, but we do have good social metrics. And we can take a look at the last year, see how sentiment has fluctuated for Radix. We had a huge local top here. This was around the same time Bitcoin and Ethereum had their all-time highs here in mid-November. Things were extremely positive, and when things get extremely positive, that's when you see the drop-offs. When you start seeing a sustained period of time where things are very negative, that's when you see the rises. And then suddenly we got super positive for some unknown reason. I'm not familiar enough with Radix, and prices resumed going down for a bit. Another euphoric spike here for whatever reason, just a couple of weeks ago, when prices have gone down. And then we're now back in negative territory. This is the most negative, in fact, since late February. So that's a good sign. It appears that some have capitulated on Radix after a pretty long period of time of being either just mildly bearish or very bullish. So as far as weighted sentiment goes, we're seeing more optimistic signs than worrisome. Nothing on whales, supply and exchanges. We should have development activity, which we do. Yeah, we're seeing a fair amount of development for Radix. It's certainly not a dead coin by any means. The team is producing about 20 GitHub submissions per day right now. And it's not exactly a growing development activity asset. I'm going to take a look at the long term. I'm not sure when Radix came into existence, but I'll go back to 2017. Yeah, so there's some good long-term signs that the team has been working pretty steadily going back to 2018. It didn't really start trading up until 2021, but they were developing for a good 3 years before. And yeah, overall, I mean, if we were to draw a line, this is all, of course, just manual eyeballing it, but it does look like it's moving in the right direction, something like that. And that's what we want to see when it comes to development activity for a coin and seeing its long-term viability. And then finally, social volume and dominance. We saw a massive, I got to zoom in a little bit again. We'll do, that's about the last 3 months or so, last 4 months. So we saw a huge dominance spike here right after the local top in late May. Dominance is staying somewhat high. So at least for the last 4 months, we're in a more talked about spot for Radix than we've seen in quite some time. It's getting back to where it was in November when it was way back at an all-time high. So I'm very interested to see what exactly is causing that. Even March here, we saw a big influx, and that was likely just due to the price rise that was going on there while other assets weren't doing so hot. But yeah, overall, it looks like there's a little bit of an uptick in dominance, and it's on a drop. Prices aren't really doing anything. So that's a better than average sign. It means the mainstream is interested in Radix for reasons other than prices moving up. It could be something fundamentally interesting about Radix or a real life use case for it. But I would call this a better sign than usual right now on the social side, especially with weighted sentiment also being negative and development activity showing a long-term rise. It looks like Radix has some viability of being a good long-term asset to hold on to. All right, so we did about an hour and 12 minutes or so on the call. I think this is a good stopping point. I want to thank you all for coming to join me today. Shout out to Maxim, who's in the chat, and Balresh for running the stream remotely from his home, from away from his home, I should say. And, you know, quick reminder to everyone, this is, you know, the biggest bear market or sustained drop in prices that we've seen really since 2018, I believe, 2019, arguably. And with that said, it can be easy to get impatient, capitulate, be done with crypto, especially if you continue to see some price drops from here, which very well could happen. Definitely can't guarantee anything, but try to make sure you are responsible with your trading. I occasionally get into chats with people who are putting way more on the line than they're comfortable doing. And then you start to get into a kind of a gambling mentality, and you're not thinking your clearest. So I try to advise everyone I talk to just be careful and don't trade money that you can't afford to lose. It's a very polarizing time right now, and anything can happen. So just be safe. Make sure to spread the word about Santiment. You know, having these kinds of metrics at our disposal can make it much more comfortable to digest a big loss or a big gain when you know that there's a reason for it going on in the background on the on-chain or social end. So tell your friends. You've got a referral link. If you go to your avatar and go to your account settings, you can just copy that, and any links you share on Santiment, drop your referral link at the end. And if anyone sees it and signs up using that link, you get 25 to 35% of their sign up in cash. So that's all from me. Thank you all, and I will talk to you all on our upcoming webinar in 4 days, Tuesday. Talk to y'all then.